Wye Grousbeck is a name synonymous with modern sports ownership and shrewd business acumen. He is the lead owner and governor of one of basketball's most storied franchises, the Boston Celtics. But his journey is far more than a wealthy fan buying his favorite team. It's a masterclass in calculated risk, strategic patience, and relentless value creation. His story demystifies how to build something monumental, not by one genius move, but by a series of deliberate, well-executed steps. This video will trace Grousbeck's path under the theme, Milestones to Money. Each stage of his life and career built the foundation for the next, leading to a billion-dollar enterprise. This is not inherited empire or overnight lottery winnings. It's built on education, early professional grind, and the courage to make a pivotal, life-altering investment. He understood true wealth is cultivated, not simply acquired. His approach is a clear blueprint that can be studied and emulated. He combined a deep understanding of finance, law, and human nature to transform an underperforming asset into a championship-caliber organization. Small, consistent choices compounded over time to create extraordinary results. We'll explore his progression, foundational years in law, venture capital, then the audacious purchase of the Celtics. The year 2002 marked the single most transformative moment in Wye Grousbeck's career. He decided to stop funding other people's dreams and start building his own. He set his sights on purchasing the Boston Celtics. He saw not a faded glory, but a deeply undervalued asset with immense potential. The first step was not about money, it was about people. He began assembling a diverse group of investors. He reached out to his father, H. Irving Grousbeck, and other seasoned partners. He brought in Stephen Pagliuca and a host of other partners. They formed Boston Basketball Partners LLC, distributing risk and pooling expertise. They raised capital, navigated league rules, and sought approval from existing owners. The asking price was $360 million, staggering at the time. His legal training and composure proved invaluable through painstaking negotiations. On September 27, 2002, the deal was approved. Grousbeck was named governor and CEO. The risk was enormous: losing team, weak finances, immense expectations. But he had a plan built on business development and value creation. Owning the team was just the beginning. The real work started after the papers were signed. He ran the Celtics as a complex entertainment enterprise. His first major move: install a world-class leadership team. He hired Danny Ainge to lead basketball operations. He focused on rebuilding the business, the fan experience at the arena and at home. Investments in seating, concessions, and in-game entertainment elevated the product. The financial success of Wye Grousbeck's investment is a stunning example of long-term value creation. His group purchased the team in 2002 for $360 million, a price some called steep. He bet on the NBA's global growth and revitalizing a legendary brand. That bet paid off spectacularly. Over 2 decades, the franchise's value multiplied. A key milestone: the 2008 NBA championship supercharged the brand. Media rights rose, ticket demand spiked, and global merchandise soared. Premium sponsors followed, winning. By the mid-2010s, value crossed $1 billion. By 2024, Forbes valued the Celtics at $4.7 billion. Real estate and development around the arena created additional revenue. Thousands of smart decisions: people, fan experience, calculated trades, diversified income. Wealth was built slowly and deliberately, compounding over decades. Through his actions, Wye Grousbeck provides a practical playbook for financial success. These are simple, powerful rules anyone can apply. First, think long-term. Treat great assets as generational. Invest in players, facilities, and staff, even when payoff isn't immediate. Avoid short-term gambles that compromise the future. Second, build strong teams and empower experts. Delegate critical decisions to those with deep domain knowledge. Third, diversify across synergistic ventures: media, technology, real estate. Build an ecosystem where each business strengthens the others. Create value before capturing it. Money follows value. Career progression: Princeton history sharpened narrative and trend analysis. Michigan law added contracts, negotiations, and corporate structure. At a top law firm, he learned deal mechanics and risk mitigation. An MBA at Stanford shifted him from advisor to business leader. 7 years in venture capital refined his eye for value in teams. He mastered assessing risk, valuing companies, and building partnerships. Prepared, he seized his moment, acquiring the Boston Celtics. Business development, make the core product, fandom, better. He elevated the in-arena experience end to end. He embraced digital media, analytics, and modern marketing. He expanded revenue streams and forged premium partnerships. On-court success validated the business model. The 2008 title became the ultimate return on investment. Financial advice, patience, discipline, and incremental improvement. Break big goals into steps. Small wins compound into a dynasty. Businesses owned and interests. Sports, media, technology, and real estate. A synergistic portfolio. Each venture strengthens the others and stabilizes risk. True success isn't an event. It's a process. Show up every day and make it a little better than yesterday. Wye Grousbeck's legacy, turning milestones into money. He turned personal passion into professional triumph through foresight. This roadmap applies to entrepreneurs, managers, and anyone willing to plan and persist.